SD Bullion has just launched Survival Food, headlined by the only 100% organic, GMO-free survival food. Prepare like the doc. Purchase your survival food from SD Bullion today.
Metals and Markets is sponsored by DNA Precious Metals, a near-term producer of the Montauban tailings mine in Quebec, Canada. DNA Precious Metals trades on the OTC BB market under the symbol DNAP.
This is the Doc and Eric Dubin with SD Weekly Metals and Markets. Well, Eric, after another continuation of the beatdown early in the week on Monday and Tuesday, gold was hit hard both on Monday and Tuesday, bottoming about 1260, recovering pretty nicely throughout Wednesday, Thursday, and today Friday's trade closing the access market just above 1290. Eric and I were discussing just prior to the show, while the sentiment is terrible and it feels like both metals have just been pounded and the beatdown is seemingly unending that began back in April, and here we are in November. Somewhat of an encouraging or positive sign, gold seems to be placing higher lows, with the first low that was 1178 or 1179, I think on June 28th, and then we had the mid-October low of 1251, and now 1260 here on Tuesday. So gold making higher lows, which is, if anything, gold making another higher low, potentially indicating a change of trend, and that the bottom was in fact placed back on June 28th. And then for silver for the week, down $1 intra-week from last Friday's close, and also stronger later in the week in the second half, Wednesday, Thursday, and Friday. Closing today at 2078, down about 50 cents for the week. So what's your thought, Eric? Are we seeing a change in trend? It certainly seems to be, also with the supply constraints starting to pop back up again, particularly in silver, and the GOFO going negative recently again in gold. It certainly seems to be potential of a change in trend.
I do think there, in the very least, will be some stabilization in the horizontal trade, if not a change in trend moving higher. I mean, it's interesting you mentioned GOFO because I was viewing that data earlier today and also earlier in the week, and it is now positive. And what signaling we had seen earlier and using it as a forecasting tool seems to have just gone away up in smoke. So there are contradictions when it comes to using some of these indicators, and at the moment it looks like GOFO is not giving us a very clear signal one way or another. However, when it comes to looking at just the whole political layer that overwraps the market when it comes to Janet Yellen coming into the picture and her testimony this week, and that in fact was one of the primary drivers of gold and silver moving higher, combined with all of the machinations that we have been talking about when it comes to first the euro hitting 138.50, I believe, against the dollar, and then that proving to be a trigger point where the ECB and France and other weaker economies within the euro zone created pressure among policymakers to push the euro down such that they could expand exports and the whole eurozone economy. And we see that in conjunction with the Japanese yen continuing to decline in expectations within the trader community that's going to continue, along with just this unbelievable amount of money printing when it comes to Japan. Their QE program is on a relative basis in terms of its comparison to the United States economy, and it's more than 2 times what the Fed has been doing. So all told, it looks like policymakers have, whether formally or informally, created a kind of scenario where we have a window of opportunity for Yellen to come in, where the euro has been taken down a few notches, the Japanese yen continues to fall, QE around the world has been reasonably strong, and now the Bank of England and even the ECB are beginning to speak about having more easing in their policy. and the United States will have the ability to follow suit with first the diminishment of the discussion of tapering, and then perhaps maybe even in response to weakening economic conditions, a brand new discussion of renewed QE, or maybe debt forgiveness on student loans, or some kind of combination of a monetary policy change with greater liquidity coming out of the Fed in conjunction with something they can cook up in Congress when it comes to laws with respect to debt forgiveness, and maybe programs that will help the housing market more, and who knows. But it seems as though the political and economic backdrop is beginning to shift more in favor of an easing picture, more favorable towards easing. And frankly, they have to have that instilled as a perception, because we once again return to the ultimate question of who's going to buy our bonds and finance the United States government. And at this point, there needs to be continued QE just to support the bond market, which is now in a full-scale bubble, in my opinion, and I'm certainly not alone in that opinion. And there really is no way of turning back, unfortunately. I mean, for example, how can the Fed, which now has quite direct title to something like 7 or 8% of the mortgages in the United States, how do they sell that paper? I mean, who are they going to sell it to? It's a Ponzi scheme now at this point when it comes to the credit markets.
And what would it do to the market if they tried to unload that
paper?
It
would be a disaster. I mean, you'd have to have wanting capital in funds to buy it, or sovereigns. Maybe the Chinese might want to buy a small amount of it, but I can't imagine them wanting to take on that level of, more than $1 trillion worth of mortgage-backed securities and whatnot, when most of those particular mortgage-backed securities the Fed has been buying are the junk that the banks are offloading. So, I mean, the position that the Fed holds is rather stinky. I mean, who the heck would want to buy that stuff? It's probably worth maybe, at best, 60 cents on the dollar. All this kind of comes together into a big picture that suggests that more stimulus is on the way, one way or another, and the political shenanigans that we saw with respect to the euro being taken down fits into that picture. These pieces of the puzzle are fitting together. And then when you look at what's happening when it comes to inflation as expressed through equity markets, I mean, the Japanese market went up 7% on the Nikkei Dow index this week. 7%. There's a lot of people in the gold and silver camp that don't believe that the stock market can continue to shoot higher. But I got news for all you folks. You got to be careful of being too far in the doomsday scenario camp, because when it comes to the monetary inflation expression of choice, when viewed from the perspective of the Federal Reserve and the Treasury Department, they don't mind stocks rocketing higher. And it's not a surprise that, in fact, the NASDAQ is almost now going to retake the 4,000 point level, and the Dow is at a new record. I mean, by this time next month, I would not be surprised to see the NASDAQ taking out 4,000. So,
and not only the Japanese market, we've seen the art market exploding, and really it can only be described as a bubble type phenomenon. I think just in this past week, the all-time record for a painting at 142 million was set by, Francis Bacon. I think it was a 3-piece painting. But so just like the Japanese, all that the money flows somewhere, and artwork is receiving a lot more of the flow right now than the precious metals, gold and silver, but that can change.
Yeah, and as Keith Barron was mentioning on King World News, that is an expression of the uber wealthy trying to find some form of safe harbor when it comes to their assets. And buying artwork has traditionally been among the categories where you have a relatively high concentration of wealth in a small package. Diamonds, gold, and, well, not so much silver, but the ability to buy physical assets that are outside the banking system and to park wealth to weather currency storms. And that's what we're looking at. I think 2014, or at the latest 2015, we'll see some very significant changes when it comes to the dollar standard. I mean, it may not be the ultimate end game, because it's quite possible that the end game will in fact come in stages. But suffice it to say, with the credit bubble that we have in the bond market and interest rates inevitably needing to rise, the only choice the Fed has to counterbalance that is a somewhat blunted tool of QE, such that they're able to go out and buy bonds, but that can't work forever, because as soon as the traders in the market fear that the Federal Reserve will not be able to impact prices versus the counterbalancing forces of rising inflation expectations, or just fear of turmoil of credit risk that can upset the apple cart just as easily in the credit market. When that critical threshold is reached, it'll be the rebirth of the bond vigilantes, and that's what will pressure the dollar, will pressure the bank balance sheets, because as bond yields move up, the price of the bonds on the bank's balance sheets go down, and in turn the bank's equity goes down, and they will have to, just this week, Morgan Stanley was downgraded amongst a couple of other banks, including J.P. Morgan and Goldman. But Morgan Stanley in particular is most likely going to have to raise some new equity, given the Moody's downgrade that they received this week. Right. They are definitely one of the weak horses out there, and these are the kind of things that can send people like Janet Yellen into their back room contemplating just how many trillions they need to add to fix the system. So.
I wanted to give the readers and listeners a quick update here on supply situation in silver, particularly in the U.S. We've been predicting over the last couple of weeks that premiums would gradually rise over the next 4 to 6 weeks, specifically in the Silver Eagles, probably jump quite a bit more come December 9th through mid-January with the mint shutting down. And we're still looking to see premium rises and shortages then from there spread to the other products as Silver Eagle demand is spread out into the other retail silver products. And we have seen a continuation of that this week. Silver Eagle's premiums have jumped anywhere from 25 to 50 cents an ounce throughout the suppliers. And several of the suppliers sold out or shut down sales Thursday and or Friday. Won't make any further sales until Monday when they receive their allocation numbers from the mint. So a continuation of what we have been seeing and expected to see with the Silver Eagles. And another interesting thing, development this week that seems to lead a little more credence to the fact that the U.S. Mint may actually have a shortage of metal, and not. It's really not for those people who say, "Oh, this happens every year. The mint shuts down." We're talking about changing out a die. Private mint can do that in an hour. So it's a government. It's government. It's a U.S. mint. It's not a private mint, but we're talking a 6-week shutdown. It doesn't take 6 weeks, obviously. But along that lines, the Sunshine Mint, which is the private mint that supplies the U.S. Mint with the blanks to make the Silver Eagles, there's a developing shortage in those Sunshine Silver Eagle rounds. They've been, over the last probably couple of months since the big shortage early in spring, they've been live at the wholesalers, and just over the past week, there's been about a 3 to 4 week delay crop up in the Sunshine Mint products with the Eagles, and particularly even the 10-ounce bars are on delay till about mid-December. So just a little bit of further evidence that the Sunshine Mint, who actually supplies the silver to the U.S. Mint, is short of actual physical silver, or at least backed up and delayed.
And there's definitely smoke coming from the U.S. Mint when it comes to what their positioning is. When they have had die changes in previous years, they never took as much time as they're taking now. This is the longest period they've ever needed to switch things around. So obviously there's something going on. The program has been active, I think, since 1986, if memory serves. So why is it that we're only seeing these long extended periods of switchover within the last couple of years? It just doesn't make sense at all, unless if we assume that they're trying to do inventory management because of silver supply issues.
And you have to look at it in context of the U.S. Mint has just set an all-time annual sales record at over 40 million ounces.
Right.
They likely haven't planned for any more than that, whether it's their purchases from the Sunshine Mint or others, that the shutdown comes in context of all-time record sales. So we'll continue to keep an eye on that. Monday is all the wholesalers will get their allocation numbers from the Mint, and I wouldn't be surprised to see premiums jump again. So we'll keep an eye on that and see what it does throughout the week. And whether that the shortage of the Eagles and the premiums starting to creep up does start to spread out to some of the other products like the Silver Maples, or really haven't seen that at all yet, or some of the other generic products like the more common bars and rounds like the Johnson Matthey and the Engelhard and the Royal Canadian Mint bars and such. Wanted to shift gears here to a little lighter note. For any of those who weren't paying attention, earlier in the week, I think it was Wednesday, JP Morgan had the bright idea of having their vice chairman, Jimmy Lee, host a 1-hour public Twitter Q&A. They targeted the marketing campaign towards college students, and really I can just see the conference boardroom now, the mid-management 50-somethings saying, guys, how are we gonna get target our brand to these 20 to 26 age group? And one of them says, like, well, my daughter's always on that Twitter thing. And a couple more guys chime in, like, yeah, we'll do a Twitter. We'll send Jimmy over.
Social media.
Yeah, we'll do social media. That's all. That's the rage right now. We'll send Jimmy over, and he'll answer all their questions, and we'll get some street cred with all the young hipster crowd. So they announce it, and they so one of the most epic PR disasters in recent history. Obviously, it was canceled later that night. Some of my favorite tweets they received. I'll read just a couple of them here. I have mortgage fraud, market manipulation, credit card abuse, LIBOR rate rigging, and predatory lending. Am I diversified? Pound SJPM. Another one. Does the sleeves wash off with regular shower, or do you have to use something special like baby tears? Pound JP Morgan. What's your favorite type of whale? Quick, this is one of the best ones here. Quick, you're in a room with no key, a chair, 2 paper clips, and a light bulb. How do you defraud investors? They literally receive thousands of these such tweets, and for our readers who actually went through and perused the thread, we're not picking these out like sporadically here and there. Like probably 95% of the comments and tweets they were receiving were similar. Maybe not quite that witty, but they were all angry, derogatory, and probably caught JP Morgan in a state of shock from what they expected. I'm not quite sure how they expected it going down. I'm fairly certain it wasn't how it was, but it was pretty satisfying for myself and those in the metals community to it was pretty good satisfaction and entertainment Wednesday night, and throughout the next 24 hours it's really still continued. They said they canceled the event and shut it down, but that doesn't stop people tweeting.
Yeah, and then old people follow up on the hashtags to be able to see what people are saying. Exactly. And this has happened to other corporations as well, too. I remember McDonald's had done some kind of a campaign on Twitter, and then people started sending messages about hamburgers with dog in them and all kinds of crazy things, and they shut it down within minutes of having launched the marketing program. But it kind of goes to the whole popular cultural zeitgeist of our time now, where there are not as many people rushing to get MBAs and trying to jump on the Wall Street bandwagon because big banks and finance in particular has left a rather sour taste within the millennial market, the millennial generation, and it's not surprising to see these executives at JP Morgan trying to figure out how do we approach expanding our ranks of people in college employment fairs and whatnot, and the pitches that they make, and it's not as popular anymore. And that, I think, is a healthy thing, because maybe it'll I don't know. I mean, you would hope that the banking industry would look towards the longer term and what would be good for banking, but obviously that's not the modus operandi of our system today. Everybody thinks about quarterly reports as being long-term and basically fleecing the next guy as a means of a business model.
So enjoy the rest of your weekend. Take a day or two off of the markets. Get outside. Enjoy towards the end of fall here. So for the Doc and Eric Dubin, thanks for tuning in to the SD Weekly Metals and Markets.
SD Bullion.